All right, what's up, tycoons? Super excited for today's video. We're going to be taking a look at ARKK. I know, can you believe it? One of the most heavily shorted stocks ever. We're actually going to be taking a look at. It's got some great setups right now, in my opinion. And remember, none of this is financial advice, but I'm really just trying to educate and inform you guys on some technical analysis, how to draw up some chart patterns, use the Fibonacci's, and also use a little bit of market context and be able to read some of the news and things like that. Okay. So, stay tuned to the end of this video because I'm really going to break down a lot of the trading psychology, okay, and how, technical traders such as myself and others make money consistently in the stock market using these patterns, okay. The most important thing I think that we're going to start off with, okay, and it's highly speculative, but we're going to jump straight into it, okay. And it's actually this super bullish article, okay, written by Investor Place, right? And it says, Cathie Wood's growth stocks are primed to go parabolic, right? So this is the real reason I'm paying attention to the ARKK fund, all right? This was, published 2 days ago. It's Tuesday right now. This was put out on Sunday, all right? So there's a couple things going on. Cathie Wood stocks are forming a rare technical pattern, a bullish ascending triangle, which typically precede massive breakouts. All right, so I'm going to break down that pattern for you on the chart because when you're reading these things, you may not actually be able to spot with your naked eye a bullish ascending triangle, right? And there's patterns like these all across the market, across different stocks, and they're good opportunities, right? They offer very good risk to reward ratios, and risk management is the key thing, right? So if you can risk, one for two, right, or one for three, or one for four, one for five, right, with risk $100, $1,000, $10,000 to make $50,000 or whatever. That's kind of the right ratios that you want to have as a trader, right? Not a long-term investor, because long-term investing is a completely different game. And the easiest way to go about that is just to continually dollar cost average into, index funds, right? But that's not why we're watching this video, right? So that's one thing. We have a nice bullish ascending triangle. The other thing is the number of NASDAQ 100 stocks trading above their 200-day moving average crossed from below 20% to above 20% this week. This is a bullish breadth crossover signal that always leads to big rallies, right? And when I say always, I mean always. All right. So we're going to dive down here a little bit more. Okay. So before we do that, a couple of the stocks highlighted in this article that you may want to pay attention to. Now, I personally have no positions in any of these or ARKK at the time of this recording, right? I've been waiting for, an entry. I didn't find the entry I wanted on ARKK, but I was able to find it on some other growth stocks and make very good gains today in the market, buying the dip on the previous dip the day before. Okay. So if you want to see a video on that, go ahead and watch my latest video on the VIX update, the volatility index update. That's kind of like my market recap and my trade recap. That's a really good video for you to watch. Okay. But we're going to keep jumping into it. Shop, Roku, Square, Zoom. Those are some of the stocks highlighted in here that may see attention, just because, simply because they're listed in the article, right? A lot of people may be reading this and saying, oh, well, I need to go in a Shop, Roku, Square, Zoom, whatever the case being, right? Personally, not playing any of those, more so looking for an entry into ARKK, the overall fund as a total. All right. And they dive into a little bit of the bullish ascending triangle here, right? Bullish ascending triangles typically precede massive breakouts. That's typically okay. It's not 100% guarantee. So, don't cash out your retirement account or your IRA or your Roth or anything like that just to put everything in ARKK because you're watching this video. That's not the purpose of this, right? But the one thing that I really like, other than this pattern, okay, was the thing that I told you guys about the NASDAQ 100 stocks trading above their 200-day moving average, crossing from below 20% to above 20%. All right. Since 2008, this signal has led to positive tech stock returns over the following 60 days, 100% of the time. Okay. And it's not just me saying this and me trying to pump up like tech and growth stocks. If you actually look right now, that's what mainstream media is doing. And who controls mainstream media? It's the hedge funds, right? It's the billionaires and trillionaires of the world. They own CNBC, they own Investor Place, they own Market Watch, they own all of these news and media outlets that you are reading from, right? So you always have to take that stuff with a little bit of grain of salt and try to dig a little bit deeper, right? Maybe this is what they call a bull trap, right? And they're trying to sucker people in with a relief rally, which is what I think we're having right now, is a relief rally, because there was such a bear market drop over the interest rates and inflation and everything like that. A lot of the Wall Street analysts and the Atlanta Fed tracker and things like that are projecting the Fed, Jerome Powell, to only do a 75-point basis hike on the next meeting, right? And one of the main reasons for this is they're thinking that essentially, because we're seeing the signs, right? And this is not me saying that, but the analysts are looking at it and thinking that inflation is peaking, right? It peaked on this last CPI report, and that they're expecting it to slowly come down, and that maybe the Fed rate hikes aren't going to be as high as they are by the end of 2023, as they priced in, right? So we saw that over 20% drop on the SPY, on the S&P 500, and the Nasdaq. They both hit bear market territory, and that was the market essentially pricing in these extreme rate hikes, right? Well, now we're kind of getting a little bit of signal from analysts that we may not get as many rate hikes as we had planned for or priced in, right? So what we're seeing now is what's known as a relief rally. The largest rallies ever, over 60% of the largest rallies that ever occurred in the entire span of the stock market, have occurred during a bear market. A bear market is the smallest amount of time in the stock market compared to a bull market. Okay, so you have to think about this. Do you want to miss out, right, on the possible 60% like largest rallies that we're going to see in the stock market because we're in a bear market? Do you want to not be invested, or do you want to sit on cash on the sidelines and have a trading account, right? That's one strategy you can do. Or you can just choose to try and pick solid companies that you like and try to invest in them over this bear market. It's really tricky to try to figure out what company is going to be profitable and sustainable 5 to 10 years from now. But if you're able to do that, this is a great opportunity, right? So, I'm not saying that this market is going to go up 15% over the next 60 days, but me personally, I am playing off of the news and off of this momentum. And we've already taken profit on several, plays over the past 2 days. Okay. So that's the main reason that I'm going to highlight ARKK, and we're going to go ahead and jump straight into the chart now. Okay. So, if we look here on our 4-hour chart, all right, we can see the ascending triangle pattern. Okay. That's going to be these white lines right here. All right, so as you can see here, once we break out past this level, right, the expected move, okay, for this pattern is going to be this right here, from the lows up to the highs of the ascending triangle. What we can do is duplicate this drawing now and put it over here on the breakout. Okay, so once we get above that line, and we can see that the pattern, if we do get a breakout, is going to take us up to above $60. All right, that's a huge move. All right, so no guarantees that it's going to happen, but as far as trading wise, we are getting good indications. Okay, so what we're seeing here on the 4-hour chart, right, is that ascending triangle pattern. All right, we have our Fibonacci lines up here. All right, so this is going to give us via the math equation, the Fibonacci formula. So it's not me drawing random lines. It's actually a math formula that exists all throughout nature and the stock market. Okay, so these are going to give us some of the valid support and resistance levels. As you can see, we were able to close above this 45.99 major resistance level. Okay, this is the level that we've been pulling back on constantly. Okay, so it's going to be a level that I'm really watching myself personally, because every time we've pulled up above this level, we have not been able to hold. Okay, we can see we closed above here, and then the next day we open and closed below. We closed above here on this day, open and closed below. Closed above here, open and closed below, closed above here, open and closed below. Now, the reason that I think we may finally get this breakout, all right, is we have a little bit of some bullish divergence going on. So if we actually highlight the ovals for now, right, and we're going to focus on these two ovals right here, what we have is a high and a lower high. Okay, this is a simple stock terminology that you should get familiar with, right? So the price action, okay, based on the chart data, is making lower highs. On our RSI, if we go down to this day and look at the RSI, we have a high here, okay, and we look at today's high, or the high on this one, we can see that we're creating bullish divergence. All right. So, while this is going down, the relative strength index is actually making higher highs on the chart. All right. So, that's an indication that technical analysis traders use as a sign that we may see some bullish activity in the future. Right. So, that's one of the main things that I'm watching for. All right. Now, I'm totally expecting that we can have a pullback. All right. The reason being is that we keep, coming above this price level and then falling quickly back down below it. So 45.99 is going to be the really main support level that I'm looking at. And I want us to hold on the 4-hour chart for ARKK. Okay, if we can hold this level here and find support, then we will start a new pattern, right, of reclaiming this area as resistance to support and head higher and possibly look to get the breakout above that ascending triangle pattern right around 48.09. So that's what I'm looking at. Now we most definitely and possibly could pull back, okay, and do something similar like this. What we'd be looking for is a bounce off of this trend line. Okay, so if you want to play bullish positions in ARKK, all right, again, no financial advice, just giving you guys some technical analysis. You could wait to see if we find support at 45.99. If we're able to hold that as support, you can enter there, have that as a stop loss, right? Or if you're a little bit of a riskier trader, you can enter and hold and wait for a stop loss below 43.91, because we can see that's right along our trend line and also our major 50% retracement level on the fibs. I would really look for that as like the ultimate cut your losses, right? If we start trading below here and break below, this bullish trend line here, then most likely we're going to invalidate the pattern. Okay. But, I'm looking over the next week, over the next coming weeks and months to see what happens with ARKK. Okay. We have that article we just read about over, the next 60 days, the NASDAQ being primed 100% of the time to at least go on a 15% rally. Right, we're already seeing good market rallies going on currently. We're seeing the strength, right? So we're seeing signs and signals that, okay, hey, maybe we are going to get that 15% rally over the next 60 days. We're looking at ARKK. It does have this bullish pattern here. It does have room to pull back. So if you're not in the play already, there is still an opportunity to get an entry and still use high risk management, to diversify yourself well, right? Let's say you enter here at 45.99, okay, and you risk it going down here. That's about a 4 to 5% loss if you break below 43.91, right? If you enter in, right around 43.91, you can put a stop loss 1 or 2% below, right? You can put a stop loss 2% below and it'd be at $43 and give yourself plenty of room, right? And then what you're looking for is you're going to be looking to get the breakout all the way up to 61. All right. So, when you look at it, that's a 38%, to the upside is what you're looking to get. And then you're going to be risking, 2%, right? If you enter in here at 43.91 and you want to cut your losses at 41.83 or 2% below that, right? You risk 2% for a 38% move to the upside. Or, you can enter in here, right, at 45.99. All right. And you can risk 6%, all right, for the for 32% possibilities to the upside. So again, that's a 1 to 5 ratio. These are really good ratios where if you enter trades with these ratios, you can lose 2 to 3 times even, and win one time and still come out profitable, right? This is how people make a living and make a career out of trading, versus just long-term investing, right? Is when you're using the right risk reward ratio. You can say, okay, well, I can lose 1 or 2 times, but if I win using this strategy, my win is going to much outweigh the losses that I have. Okay, so that's mainly the main reason I'm showing you guys this, is because there is some bullish sentiment in the market currently, believe it or not, even after the crazy CPI report and PPI, all the crazy inflation data and things like that. You really try to have to, keep up with the market every single day. It's so hard these days in the stock market. Everything, it's really tough to swing trade. It's really tough to day trade, but if you set yourself up with high quality trades, you can afford to be wrong a couple of the times, because when you do win, your win is gonna your wins are gonna much heavily outweigh your losses. All right, so appreciate you guys watching the video. Just want to mention that I do viewer requests every single week. So if you like this video where I gave you guys a chart pattern, I showed you guys some Fibonacci levels, gave you a little bit of an article kind of just backing up some of my thesis, right? And the things that I'm saying to you guys, let me know in the comments below. All right. Let me know what stock you want to see next, and let me know what style of video, whether it's a tutorial, whether you want me to see, chart up a stock with you with a chart pattern and see what chart patterns I see, whether you want to look for some bullish divergence, you want me to see, hey, is there bullish or bearish divergence? Is there Fibonacci's? Like, what are the Fibonacci levels you're looking at? Things like that. Okay. So, let me know in the comments below.